Hi there, traders. This is Chris Keene from Keene FX, and let's do the weekend rundown. Let's go through the majors, some of the exotics I like to take a look at. And it is month end. We're heading into the new month. Finished it up, made 180 so pips for the week. Kind of quiet, but for the month, that's what's counting. I'm up about 1,500 pips, so I'm happy about that. Let's take a look. Well, I'm happy about that because it's over. Locked them in the bank. Let's take a look at the what I'm looking into heading into the new week, and I've already put up a couple posts out, a couple charts on the blog. I put a chart out for, I think, for the EURUSD, Great Britain AUD, Great Britain New Zealand, just because they're the most interesting, most compelling setups. Take a look at those. All this stuff is all the charts that are under the top chart section, and this video, the weekend wrap, that's free of charge, so you can take a look at that as much as you want. What we have going here in the EURUSD, this is pretty simple chart. I mean, it's pretty basic here. We just have a bouncing around market. We have a 127.50 as support. We have an ascending trend line right here that's capping everything off. Let's get a better look at that. Capping everything off right here, and look, we came up a nice touch of it, 132.30 area, and then a swift move down all the way down towards the 131.80 area. But now we're still just bouncing around in this area. So what are we thinking heading into the new week? Let's see. Let's jump into a 4-hour chart, and you can see we just have a lot of congestion. We have a bottom firmly placed right here on a 4-hour chart at 132, and we need a break of this range. If not, we're just gonna until that happens, we're just gonna be a lot of chop. And it doesn't matter how impressive moves look or how quick things move around, until we get a break out of this 132 area or a break above this one. That's basically 133. Or it's going to be very difficult to get in and out of the EURUSD and make some pips. So what you need to take a look at more importantly is the bigger picture. And the bigger picture, as we just looked at, is that there's the descending trend line. We need a break of this trend line, then we could get some Momo to the top. Or if we get a break of this 132 level, then maybe we can get a little bit of drift, a little bit of trend, and maybe we could see a push back down towards the bottom of the range. But what I'm really hoping we don't get is this right here, just a boom, 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 just a little chop zone, and the pair just sits and wades through that in the slower month of August. Let's go on to our next pair. Let's look at the Great Britain USD. You can see this pair is very uncompelling. It's sitting right at the middle of its range, and right here, right now, I mean, I couldn't really tell you what's going to happen, but I could tell you that we have a top of a range which is created. Let's jump up to a one-day chart here. We can see that we have a top of the range that's created by the 0.382 fib at 154. That 154 level is pretty key right there. If we get a break of that, we could probably jump up towards the 50 fib at 155.85. Now the pair did well today in North America after it had good data, and then it followed the Momo higher after the employment report disappointed. I always find the employment reports kind of hilarious. I mean, the United States has 300 million people living in it, and they miss the numbers by 20,000 jobs, and that creates huge swings in the markets. I mean, we're talking about a very small sample of a very big society, but that's how the ball rolls, and that's what people like. And I guess you need a barometer to get things going. So let's see. We have the so we can see that the pair right now is sitting in about the middle of its current range between 150 and the 154, and there's really nothing that I would be interested in doing right now until at least we get it to a test the top of the range or a push to the bottom of the range. Or you could watch the daily breakout trading that I do predominantly. Just look for a breakout of the range through the Asian trading and so forth. There's info on the website about that if you want to learn a little bit more about that. But until right now, I'd remain sidelined on that pair in its current environment. The Aussie, we can see, just keeps pushing down lower, and you can see this week it broke below the key 190 level. Let's jump this down to a 4-hour chart, and as long as this pair stays below that 190 level, it favors a continued move lower, and I don't see any support into this 87.50 level right here. Now, I didn't just pull that 87.50 level out of thin air, but you have to go pretty far back to find out why I jumped out at that 87.50 level. and that's going all the way back to, what is that, 2010. We had some serious support right there at 87.50, and you can see the pair bounced off it once, twice, three times. So maybe we can find a little bit of traction right there. And the interesting thing about the Aussie and the New Zealand, they couldn't even find any traction on the with the bad data out of the United States. They continued to push lower. Let's just jump down into a 15-minute chart, and you can see what I'm talking about. You can see that these pairs couldn't even tried to jump higher, but then tried to jump higher on the initial news and then just gave up all their gains and basically just trendlined right at the 89 level in this cross. But you can see the same thing with New Zealand. They could not find any direction, and without that direction, they any direction higher, they couldn't follow the Euro and Oz. They just kept going down. So that means there's people willing to buy on them, willing to sell at any pushback higher. There's a great unwind of this carry trade, unwind of the Aussie and New Zealand positions. Intriguingly enough, I'm just going to show you two charts that are just interesting. The Great Britain odd. You can see I sent a chart out about this. This pair had been in a 4-hour chart, would give a better indication of what I'm talking about. This pair had been in an ascending wedge, broke higher, hold above this 170. We could see a continued cycle higher, and we don't even have another serious support level to 176. I'm not saying it goes up to 176. I'm just saying that would be the next level you'd be even interested in trying to fight this pair if you were so inclined to fight the momentum. And the Great Britain New Zealand, you can see this pair is testing right here, the top of its current range, but it did break out of the triangle that was pushing it lower. So if you wanted to get in this trade right now, I would hope, honestly, I'd hold off because we got a little bit too much overrun. We could get a pullback here at this 194, so let's say 195 level, and I'd look for a pushback down towards this trend line for an opportunity to bounce back higher, or if you get a break of this level, a break of the 95.32 level. All right, everybody, that's what all I'm looking at going into the new week. Everybody, good luck trading. If you want to find more about the great breakout trading or see how my results have been for the last few months, everything's updated on the blog. Everybody have a great weekend.